What's up, guys? It's Ray J back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers. I'm also going to break down why tomorrow is going to be a very important day as we have CPI data coming out, not to mention big bank earnings. And I'll talk about how this may affect the share prices moving forward. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. We deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY in uninvested cash. This offer has been extended until the end of March, so please check it out before they run out. Anyways, now let's talk about the market. So the market had a very, very mixed day. We saw some tickers in the green, some in the red. Tesla started off with a big pump as we predicted yesterday, but then the pump got a rejection, and we saw Tesla sell off as time went on. So I'll break down more information about this in the next couple of minutes. But just know that we have something very big that's going to be affecting the way the market's going to move, and that is CPI. So as far as the market goes, we had a very, very mixed day. We had some big tech stocks like Nvda, Google, Meta, and Tesla in the red. But then we had other stocks in the green from the finance sectors, looking at like these big banks and many others like that. So the market was more flat, if anything, with some sectors outperforming, such as finance. But the question remains, what's going to happen from this point on? Well, the market was quite mixed ahead of CPI because there's very, very mixed reactions and anticipations of how things are going to be looking. And I'll talk about exactly why that is. So looking at today, okay, we had PPI data coming out. This is the producer price index. This tends to be a leading indicator for CPI, and this is very interesting, okay? PPI was at 0.2% month over month for all items and 0% for core PPI month over month. This was all below expectations month over month. And then for core PPI year over year, this was at 3.5%. That is technically aligned with expectations as well. The only thing that was not as great was year over year. Although this was aligned with expectations, there was a slight increase in it. So we got 3.3% versus 3% last time. There's a slight increase in year over year all items PPI. And then we could be looking for a very similar trend in CPI. So what happens tomorrow? Why is tomorrow so important? Tomorrow is going to be Wednesday, January 15th, 2025, okay? At 8:30 a.m. Eastern Standard Time, 1 hour before the stock market opens, we have the very important CPI data report coming out. Now, for month over month, for core, we're expecting 0.3%. To about 0.2%. That's the same as what we got last time. And by the way, core just means it's inflation for all items except for food and energy. We tend to exclude those factors as they tend to cause a lot more volatility in the data, and they tend to cause bigger moves. On top of this, I want to mention that core CPI year over year is expected to be around 3.3%, the same as before as well. For all items CPI, month over month, we're expecting 0.3 to 0.4%, about the same as before. So just like PPI, we're expecting all the numbers to be the same as last time for everything except for one thing, and that is all items CPI year over year. So we're expecting all items CPI year over year to be at 2.9%, a slight increase compared to before. And we actually got that on PPI, so we might see something very similar with CPI. I think what's going to happen, this is what my guess would be, my assessments, if anything. I think that we're going to most likely get most of these numbers very close to expectations, but I am not sure about all items CPI year over year. This is a little bit trickier to predict because for PPI, it was basically aligned with expectations with a slight increase. I don't know about this. This is a little bit tricky. One thing worth mentioning is that when we look at like the previous data, okay, we've been looking for core CPI to be about the same. So this is going to likely be very close to being the same. But then for all items, it's been on a bit of an uptrend. And this is what's been a little bit more negative for the markets, because when inflation keeps going up like this, it's not good for the Fed. It works in opposite of what the Fed wants. What's happening is it's affecting the bonds market, causing yields to start going up. As yields start going up and the dollar follows that, we're looking at the overall market coming down. This is what's fueling the sell-off in the markets. Why? Because if inflation is increasing again, this incentivizes the Fed to once again keep rates higher for longer, which causes more pain in the economy. If we get a decent CPI, if CPI is below expectations, if everything is below the numbers I'm showing you right here, so for example, if we get a 2.8% or lower CPI year over year, that's going to be bullish. If it's at 2.9% or higher, that could be a little bit in the middle, if not more bearish. So keep that in mind, because once again, it won't be good for the Fed's policies, and then that could also lead to a lot more fear. So please keep that in mind, guys. We'll be watching for this very, very closely, at least as time goes on. I want to mention that if you look at CPI compared to crude futures, compared to gas prices and crude futures were both about the same in December compared to November. So there's a good chance that CPI is going to be very close. So that's what I'm basically anticipating looking at this data. I don't know for sure, though. The data is very manipulated, so I can't make promises. I know that there's lots of manipulation that's involved. So we'll see what ends up happening from here on out. So that's the first thing to remember. CPI comes out tomorrow. Most likely, most of the data should be very close to expectations, I think. But then I'm not too sure about all items CPI year over year. I'm not too sure about that, guys. It could go either way. On top of this, we also have JP Morgan Chase, Citi, BlackRock, Wells Fargo, and Goldman Sachs all announcing earnings tomorrow morning. This could also cause volatility in the markets, so we'll see what this leads to. Banks are very, very pivotal for lending to businesses that affect pretty much our economy, the US as a whole, and the entire stock market. So make sure you watch for this very closely to see how their guidances look. Guidance is going to be key for tomorrow, so I'll talk about that as well. One more thing about the broader markets. Right now, there's a lot of fear that's making up the majority of sentiment. There's a lot of fear approaching CPI. Momentum is currently at extreme fear as we're very close to the 125 daily moving average. Then the put to call option ratio is climbing because we're seeing a lot more shorts piling into the markets. And the VIX is very neutral. So we'll see what this leads to, at least moving forward. But that's what I'm seeing for now. So what about Tesla? What news has come out for Tesla? Morgan Stanley gave Tesla an overweight rating, and historically Tesla has a weakening price price ratio because Tesla's losing a little bit of strength. We tend to be green, excuse me, we tend to be green 48% of the time on Wednesdays, so that's not too bad. And we see more volatility at 11 a.m. and 1 p.m. Eastern Standard Time, so watch for that as well. Besides that, there's nothing else that's too crazy. I also want to add that as time goes on, Morgan Stanley also has some bullish targets. The reason why Tesla saw a big spike yesterday is because we saw Adam Jonas come out and give a very, very bullish case for Tesla, saying that in the bullish case, we could be looking for an $800 price target. If their autonomous technology continues to push, they get a lot more revenue thanks to ride sharing and other factors just like that. So I do agree with him. There is a lot of upside potential in Tesla. That was a good piece of news. But after PPI came out, Tesla didn't maintain those levels and ended up coming back down. So what do I see for the share prices for the market? What do I think is going to happen for tomorrow? Let's talk about these levels and I'll break down, Tesla and the others. So with that being said, what do I see here? So looking at Tesla, okay, we tend to push up once again to the 420 zone and we reject near there or 415. And then we tend to get bought back up around 380. But if you look at the trend, we've been on a bit of a downtrend for the last couple of months, last couple of weeks, actually. And we've been continuing to fall since, mid-December. So it's been not the best of news. And then what's not too good about Tesla is the fact that we made a lower high here. So we were not able to take out this high here. And we also closed below our trend line of support that's been holding us since October. So if anything, it looks like we're range bound on Tesla. And this technically looks like a double top. This typically will suggest that more downside is more likely. So if we're bullish, we get a good CPI. Just hypothetically, you want to see Tesla reclaim 406. If we break past 406, we're looking for an attempt to get back up closer to 420. If not, if we get some bad news and CPI is above expectations, Tesla could be dipping closer to about this 388 area, if not back down to about 380, which is where we like to get bought back up. Overall, the technical share price is favoring downside a little bit more looking at this. I hope we try to get a bounce, though. I'm going to try to be optimistic, but just know we still look a little bit weak technically. Now, I'm not a fortune teller. I can't make promises about CPI, but I do want to warn you that Tesla looks a little bit weaker. So please be very careful, especially as we got this second rejection. On SPY, there's a bullish and a bearish case. Now, the bearish case is there's a head and shoulders here, which could lead to a lot more downside. The bullish case is there's an inverse head and shoulders on the much smaller time frames. So if we're bearish tomorrow, just hypothetically, if CPI is hot and we don't get good bank earnings, we could be looking for a move back down to 580 and 578. If we lose 578, we're at risk of retesting the lows from Monday all the way down to 575, then 572 or below. And the head and shoulders that's much larger could continue to pan out for a big rejection. If we get a decent CPI, however, if everything's below expectations and the market tries to bounce, you want to see SPY try to hold above 584 points, 584 at the very least. If we hold above that, we're looking for an attempt to get back up to 588 to fill this imbalance. Now, there's a left shoulder here, there's a head, and there's a right shoulder. And as long as CPI comes out good, we could be looking for that to pan out for 588. The setup favors upside a tiny bit more, so this does look like it wants to push a bit. Because we closed in the green, we saw some buyers defend at the end of the day. So we'll see. Anything could happen, but I just want to see that the upside looks a tiny bit more probable for SPY, so just keep that in mind. For ES, we have the same thing going on. We have a left shoulder, a head, and then a right shoulder. If we continue to fall, if we can't hold above 58.95, we're going to be at risk of dumping all the way down to about 58.50. And if we try to bounce here and break past 5900, we're looking for a push for 59.31. So it could go either way, but I do like the fact that there's an inverse head and shoulders. And as long as we try to get back above our 20 EMA with these wicks forming, it does favor that it wants to bounce just a little bit more for the 5900s. So we'll see which way we end up going, as we could go either way. So give this some time to develop. And just know that with the inverse head and shoulders, this could once again attempt to pan out. So I think that this does favor upside just a tiny bit more, but I don't know for sure, as it depends on CPI. So we'll see about that just to be safe. Now, for Nvda, I'm not too happy about this, okay? I would love to be, an optimist and say that this is going to continue to bounce, but the problem is it had this big red bar, came down at a lower high, came down at a lower high, came down. It's just continuing to reject over and over again. Then you have this imbalance down here around this 127.5 area, which could suggest some downside. So if we're bullish, if we get a good CPI, we want to see this thing get back above 133 and 135. If not, if we lose 130, we're looking for a dip back down to 127. I think that this is favoring a move down to about 127. It does look a little bit weaker, but we'll see depending on CPI. I can't make promises. I just want to say technicals do look a little bit weaker on Nvda. We'll see how CPI affects this, but just know that there's a little bit of weakness. Bitcoin's completely indecisive. A good CPI could easily launch this to about 98,000. And if CPI ends up coming in a little bit hotter than expected, there's going to be a risk of this dumping to about 94,850. So the bearish cases, we lose the 94,800 area to start dumping. The bullish cases, we break past 98,000. With a double bottom, it could go either way, so we'll see how things end up going. So give this some time to progress. For others out there, we have, once again, Tesla. It has the double top, so I'm a little bit concerned about this. Technically, it's a bit more bearish, but we'll see depending on CPI. On NQ, the same thing is going on. So the problem with NQ is the fact that we're making lower highs over and over again, and we're not holding above our 20 EMA. If we're bullish after CPI, I want to see it break 21,050 to start pushing higher. If we're bearish, it could be dipping a little bit lower because we're rejecting off our 20. It's not looking that good to me because of this like red bar that's forming. So it is favoring a move lower to about 20,800. We'll see if we bounce off that or not. Maybe there's an inverse head and shoulders, but it's just not looking as strong. So be a little bit careful with NQ. Despite that, I'm seeing more strength in the QQQ. So there's a left shoulder, a head, and then a right shoulder that could be forming. If we're bullish, you want to see it break past 510. If that breaks, we're looking for 512 and 515. If we're bearish, you want to see it essentially lose 502 and 500 to start dumping back down towards the 498 area. So it could be going either way. But looking at the 4-hour, as we're trying to churn right over here, this does favor a move back up to about 510 plus as the most likely possibility or higher. So it looks like we're trying to base on the QQQ, which could be causing a bounce very soon. It has the potential to do that, so we'll see just to be safe. On Aapl, same setup. We have an inverse head and shoulders like pattern. If we're bullish, you want to break past 235 to push up for about 237.5. If we're bearish, you want to see us essentially lose 232 to start dumping to about 230. With the inverse head and shoulders, we could go either way, but I hope we try to get some kind of rebound right here. That would be very, very useful and very, very awesome if we end up seeing a move like that. So we'll see how things end up going. I hope we get this inverse head and shoulders for a bounce for 237.5. But even though there's that gap to fill, we'll just have to give this some time to develop, and we'll see how things end up going from here. For others out there, we also have Netflix. Netflix is on a bit of a downtrend. We have a double top leg pattern. We're continuing to fall, making lower highs and lower lows. But just know this. If we're bullish, you want to see this try to get back up to about 850. And if we can't do that, this is going to favor downside. Because of the big red bars here, that typically leads to a lot of a momentum shift. And then we also have another one right here, which typically favors us continuing to dump towards like 815 or below. So this does look a little bit more bearish, technically speaking, but we'll see just to be safe. If we're bullish, you want to see us get back above 850. And if not, we could continue to fall. So I think this still favors downside. For MSTR, we have a nice range right here. So there's one good thing I want to say about this. It's trying to base quite well so far. So I think that there's like a left shoulder here ahead and then a right shoulder. And it's already above its EMA. So it does favor upside. If we were to lose 329, I turn a little bit more bearish. As long as we're above at least 337, we favor a push for the 350s. I think we favor 350 plus, and we're doing a great job at holding up. So we'll see if this continues to push or not. Overall, I think we're doing a great job. For Celsius, there's also like an inverse head and shoulders like pattern. There's a left shoulder, a head, and then a right shoulder. Let's see if we try to get a bounce back up to about 27.43 or so. If this breaks, we're looking for a push back up for 28 plus. Let's see if we try to get a break here. So I think we're looking quite good with this accumulation, and we could try to bounce a lot higher if we end up breaking resistance. So overall, we're doing a good job on Celsius, and we could be pushing higher for 28. I think that this is showing a lot of strength, so this is looking quite good in my opinion. For Supermicro, we also look decent. I want to say that there's a little bit of weakness here, but simultaneously it's holding support around this 30 area. So it looks like it might revisit this. I hope we try to hold 30, because if we don't hold 30, this dumps back down to 27, all the way down to these lows over here. If we hold 30, we try to bounce. To me, it does look a little bit weaker, as it could be dipping lower, but it's going to likely just consolidate. It's still showing lots of signs of sideways price action, and it's essentially just resembling others out there, such as like Nvda. So just keep that in mind. For Palantir, we're very flat right now. I do like the fact that there's a possible inverse head and shoulders, or a left shoulder, head, and right shoulder. If we break past 66.41, we're looking for a bounce for 68. And if we can't do that, we're going to be dipping back down to 64. I think this chart is favoring 68 or so, so I think it's looking quite good. Let's hope we get some buyers that defend it, and we'll give this some time to develop. For a few more, we have Rivian. Rivian is completely range bound. We have support at 13.05. If that fails us, we drop to 12.5. And we have resistance at 14.06. If that breaks, we're looking for 15. We're going back and forth between supply and demand for now, and we'll see if we bounce in either direction. So it's completely indecisive until we see CPI. So far, it's looking quite decent. We have this range I've been talking about for the last couple of days. As you can see, it's been going back and forth in a falling wedge-like pattern, but this is favoring a move to about 14.85 or higher. We'll see if we break past that. I see the upside potential, so give this time to develop, and overall, I think it's doing a good job. For the IW Russell 2000, we have a nice bullish divergence, a double bottom. We're looking for essentially 221.6. If that breaks, we could be pushing a lot higher for essentially 220 to 223. If we end up losing 219, we're looking for a dump back down towards 217. So it could go either way, but what's good about the Russells, we have an inverse head and shoulders. So it's going to be favoring 222, so give this some time to develop. For AMD is trading sideways right now. We have this big like red bar right here that's also forming. That's not the best of news for it. With this rejection, this dip that's been coming, this favors downside. We need to reclaim 119 to bounce back up to 122. If not, we could be dipping back down towards like 112. So give this some time to develop. For ARM, I'm seeing a bit of a downtrend here. I'm actually making lower highs. So the problem is, although it's trying to hold support, we need to hold above 137.8. If we lose that anytime tomorrow, we're going to be dumping back down to 134. As long as this holds, we're looking for 142. I favor it's going to try to hold up for now, so I think it's still doing a good job. Coin also has an inverse head and shoulders, a left shoulder, head, and a right shoulder. So it favors and wants to be pushing up to 265 for a nice bounce. Hopefully CPI helps us get that bounce. I honestly don't know for sure, so we'll see about that. But I really hope for that. I'm being very, very cautiously like optimistic. That's the best way I would essentially put it. For Amzn, we're range bound right here. We're looking for the support right here around this 216 area. If this does not hold, I think we could easily dip to about 214 or lower. If we bounce and break past 219, we're looking for 220. So it could go either way. We're just completely range bound. I do want to say there's a little bit of weakness here because of this rejection, but simultaneously we're holding support. So it may just chop around for some time in this like 220 to 216 range. Not really doing much. It looks quite indecisive. Meta's trying to hold above 595, so it's a good sign. It's trying to get back above its 200 EMA. This typically would favor it's going to try to push for 600 to 605 again, but then we could reject again off of that. So although this looks a little bit weaker, it favors that it wants to bounce back up to about the 600, so I hope that ends up being the case, so give it some time to progress. For Microsoft, we're on a bit of a downtrend. We need to try to get back above 420 to bounce. If not, we could continue to fall. So we're looking at support at 412 and resistance at 419. I hope we get that bounce for 419, so give this time to progress. On Google, we're on a bit of a downtrend. We have a double top right here. We need to try to get back above 193. If that breaks, we're looking for essentially 195. If we end up losing support at 190, we're going to be dipping right down. So we're technically on a downtrend as we're getting rejected over and over again. So give this time to progress, and we'll see what this ends up leading to. On top of this too, There's others out here, such as like GameStop. As you guys can see, GameStop is just continuing to reject. We could be looking for 27.5 to be tested if this continues to fall. Looks bearish. Same thing with AMC dipping closer to 3. DJT is looking decent, it's holding support here, so we'll have to see if we can try to bounce off support at 37.5. So it might be testing that before it tries to react. So it still looks a little bit weaker. The VIX is dipping a bit, so it has kind of like a head and shoulders here. We'll see if this dumps even lower or not. The 10-year and the dollar are both going to be making big moves depending on CPI. So that being said, guys, as of right now, the market's very mixed. We have tickers like SPY, the QQQ looking a little bit more in favor of upside, but then Tesla showing a little bit of weakness, forming a double top. I can't make any promises until we see what this data leads to. So get ready for some huge data, and we'll see how the market ends up responding to it. So we'll see. Give this some time. Hopefully CPI is good. I hope we get decent numbers below expectations. That can help the market bounce. And I also hope for the best for all the big bank earnings. So that being said, let's see what happens tomorrow. I'll be back before market open to give you guys another update. Until then, I wish you all the best for today and peace out.